Hello and welcome back to the show. I'm Blake Oliver,
I'm David Leary.
and we are back
We're
from
literally back. Yes, back.
Sweet World in Las Vegas. I have Vegas throat as usual. Apologies, dear listeners. I'm a little more raspy than usual, but we'll pull through.
that over oxygenated, super dry air in your room. Yeah,
Well,
catches up.
they're doing a better job of keeping the smoke filtered, but it's still there. Like the toxic chemicals are still in these casinos, and I just wish they would get rid of it completely. I think the smoking rate in the United States is down below 20%. At this point, I think we can kick everyone outside. Apologies to the smokers who listen, but it's really not good for you.
Even if you stay at a hotel without a casino, like when we stay at Fedara,
Yeah.
there's no smoking in that hotel. It's a new building, and the air is just so dry. And
Yeah, that
mind
too.
you, we're in Arizona and the air's dry, but this is exceptionally dry in these hotels.
It's true. It's true. Well, I want to hear your takeaways from Sweet World, David, because we got to chat with Evan Goldberg, EVP, founder of NetSuite, as usual. Listeners should go listen to that episode. We put it out as a bonus episode, available now. And NetSuite announced all these really cool AI features. And I was actually excited about these features. It wasn't just PR. Now, they're not there yet. They still are coming to the product, but this is real generative AI inside of NetSuite. So what's your takeaway?
I mean, at a high level, right? I'm sitting there, and some of the announcements, because the whole goal of NetSuite is to run everything in the suite. And they have all this data. The more you use NetSuite and the more you use the entire suite, the more efficient you are, the faster you're growing, et cetera, et cetera. And you know how everybody does it. You're at a conference, but everybody has companies they're still running, and you're doing a little, side work on your laptop while you're paying attention and doing your stuff. And I'm just sitting there, and I'm jumping from practice or Ignition back to QuickBooks to Airtable, copying something from over here, pasting over here, and I got 15 apps open, and I'm like, man, maybe we should switch to NetSuite, Blake, and have it all in one app. That's what was going through my brain at that time, because I even had our CRM open, and I'm starting to understand the appeal of everything in one spot. Everything in one single spot.
Yeah, and we've got an interview coming out with a CFO who has used NetSuite to basically automate the entire accounting and finance function for a marketing agency, digital ads. And he's a developer who did this. And he's been able to keep his accounting and finance team to 2 people, himself and a controller, because of NetSuite. It sounded incredibly complicated what he's done. Not everybody could do it, but it's totally possible with something that advanced. I want to dig into the specific AI features that are coming this year in the next few months, apparently. The first one is the, what do they call it? Text enhance?
Well, I think before we talk about this feature, how they got there. So just how Microsoft, all these big, huge tech companies I wouldn't say they missed the boat on AI. They just weren't developing it in-house. And so they've been partnering, right? Obviously, Microsoft put billions into OpenAI.
Amazon made a multi-billion-dollar investment in Anthropic.
And Oracle is now partnering. They're tapping into Cohere. They're partnering with Cohere, Cohere. And so Cohere, you've used it. They power Notion. They power Jasper AI. So we're using Cohere already in some of our other things. So that's how they're enabling AI in their products, is through this partnership with Cohere.
And Cohere is running on Oracle's cloud infrastructure. So if you use NetSuite and you're using the AI, then it's actually running on Oracle servers. So security, right? It's all in the same. It's all in the same data servers.
Yes.
Yeah.
And
okay.
So they've added generative AI throughout the product, and what's interesting, and for me, is it doesn't have a name. They want it to be so just seamless in the suite. It's not called anything, and so it's hard to communicate about it, because I think, obviously Microsoft, it's called Copilot, and what's it called for Google? Bard, right?
Bard, yeah. Everyone gives it a name.
But they've chose consciously not to give it a name. So so I'm gonna stumble when we reference it in these conversations. But the way to think about it is, it's across all their modules, and the best easy way is description fields on an inventory item.
Any text field, they've said, is going to have this feature. So description on a sales invoice or inventory item, and
collections letter.
And the demo that we saw was just type in 4 bullet points of what you want that sales description to be, and then you press a button next to that text field, little magic wand button, and it generates a text description based on your bullet points.
Which is convenient, right?
Oh,
Like
yeah.
Your staff, your staff can just click that and just get the description.
Yeah.
But we've all used AI. What's the one problem with this? It's not consistent, right?
Right.
So what they've done is at the administrator level, Blake. So if you always want control, right? So you go into your administrative console. They have something called I'm gonna mess up the name. See, this they gave a name. It's called Prompt Studio. And in this Prompt Studio, Blake, you can create your prompt that all your employees will use on that field, and you can have that prompt tell it, go use the size field here, the unit quantity here, grab this data here, this piece of data here. Almost like the best way to describe it is like a mail merge. We've all used mail merge. Imagine in your prompt if you put in fields and then kind of give it a secondary prompt of how you want the output to kind of look, and you get very consistent results.
Yes.
And now your employees don't have to know anything about prompting. They just hit the button and they get a good enough description.
No more copy and pasting from from NetSuite into other systems. And it's really, I think, well thought out. So that's coming in the next few months.
Yep.
The next thing that was announced that I got really excited about that we saw was generative AI used to create plain English summaries on customer records. So this is something I didn't know. The number one type of user in NetSuite is the sales user, the sales person, because NetSuite, when it's implemented properly, it's a full stack solution. So it's your CRM, it's your order management, it's your inventory, it's your finances, it's the whole cycle.
Your supply chain, you know what's coming. Yep.
Yes. So you've got salespeople in there looking at customer records. Well, how can they use AI to help those salespeople? And so now, I think it's called Customer 360, in this customer profile, not only will there be all the fields that you always had that show their past orders and the status of this and that and the other thing, at the top you'll have a headline, and the headline will indicate to the salesperson if there is an opportunity. It'll surface opportunities across your CRM and put it right there in the biggest, boldest text, and then have a description of the status of that customer. This is a really realistic and helpful use case for AI they can do right now. It's not this, pie in the sky future thing. Like I could actually do this if I took a customer record and copied and pasted all the fields into ChatGPT or Claude. It could do this. So we know this works. It's just a really neat, I think, it's a really neat use case. And the last, and it sounds like you have something to say on that.
I was going to say, along with that customer, their CRM, Customer 360, like if you have a backlog of products or a different type of product offering, it can suggest based on all their accounting data who you might want to contact to sell that new product to, right? and produce the customer list and the email list for you. But that's the benefit of the whole suite, right? And they constantly refer to that, and you really see it when you're there. You're like, oh yeah, because I wish our stuff was connected a little bit better.
And the best part about all this is that they are adding all this in at no extra charge, which I think is brilliant. I got really annoyed when Google told me that in order to continue accessing the AI features in Google Workspace, I'm going to have to pay an extra $36 a month per user, basically doubling my subscription fee. Now, I understand why they would do that. They're going to try to make money, and also there's costs to run these. There's costs to run the AI, right? But I think NetSuite's making the right move. Oracle's making the right move by making it free and not charging extra for it, because it's going to increase adoption of the suite. It's going to make the suite overall more competitive and help them beat the competition, which ultimately is what you want. You want more people using it. You want more businesses to be successful on it. You don't want to charge them for this. I think Evan described it as like it's just embedded in the suite. The suite is AI powered now. So I think it's a really smart move, and I just was really impressed with that. A whole lot more announcements at Suite World we don't need to go into, but those were the big AI ones.
Yeah, I'm just scanning my notes here.
I have another AI story. This was from a listener. We'll come back, David, if you think of anything else from Sweet World. But we had a listener write in and send a video. I thought this was such a cool use of drones, autonomous drones, and AI in audit. I'm going to go ahead and play the video, and then we'll talk about it. And I'll describe the video for our listeners who aren't on YouTube. By the way, if you want to see our faces, if you want to see the videos we play, subscribe on YouTube. The Accounting Podcast is on YouTube. We're adding hundreds of subscribers every week, it seems like. People really want to join us, and you can join us live. And thanks everyone, by the way, who joined us live today. Great to see you in the chat. Hello, Michael, HK, and Hazardous. Great to see you all. So here's an example of a drone using AI to count cattle on a field for farmers.
2, 1, starting mission.
The drone is flying over automated cattle counting using machine learning. We're looking at a field from above, and we are seeing cattle detected. 9. The AI is seeing the cattle on the ground and counting them as it moves over.
Any of you have ever played Command and Conquer? That's what's happening here.
Oh, yeah. Now it's counting another 40. Now we're up to 45 cattle. 110 hectares covered in 18 minutes, counting 185 cattle. So if you're that poor auditor that gets sent out to the outback to count herds, now you can do it. And it calculates the value. Pretty neat. So that is a company called Trigger Tech, a division of Trigger. And one of our listeners sent that in. I thought that was so cool. What a great use of AI to do audit. And imagine drones flying around warehouses doing this sort of thing someday. Definitely possible.
Or AI just getting correct bank statements from banks for auditors.
That too. And actually, one of our listeners said, can AI help get PBCs from my clients on time? And while I haven't seen any practice management solutions build this, I think that is a huge opportunity, is creating the PBC list and then following up with clients to make sure they actually submit those items one by one. So rather than sending a giant list of documents like I got from my tax preparer, the AI could follow up, say via text or email, and ask for each one that I haven't submitted yet and help me get to completion on that. Because for me, seeing, I don't know, a giant list of 20 things is a little overwhelming. I got another listener mail. This was in response to our story about Don Jr., Donald Trump Jr., and when he was asked to describe what GAAP is in a deposition. Well, apparently now, in a deposition, Alan Weisselberg, Trump's former CFO, was asked to define GAAP. So we get to hear from him now. What is GAAP, Alan Weisselberg?
Are they just going to do this with every person they put on the stand?
I guess so. Now it's a meme. So this is from MSNBC.
Been convicted of tax fraud, and we learned through his newly released deposition video that he actually never took the certified public accountant exam.
If I said the phrase GAAP, GAAP, are you familiar with that acronym?
I've heard of that, yes.
Okay. Tell me everything you know about GAAP. What is GAAP?
Generally accepted accounting principles. I don't know what's in GAAP. I never took the CPA exam.
Okay.
And never studied for it. So I don't know all the various components of what GAAP is.
Are there any components you know about what GAAP is?
Not really.
Okay.
So
she should have asked why, and his perfect response should have been, I didn't want to do the extra 30 hours.
So they all know that it's generally accepted accounting principles, but they don't know anything about it. I think that's pretty funny.
Now, you're saying this is a legal strategy?
Well, claiming ignorance is always a good legal strategy, right? If you don't want to answer more questions.
I could pivot off of that to two small follow-ups from one's FTX related or crypto related, and then one's the Canadian CPA standoff.
Yeah, go for it. Let's just jump around.
We can jump around. So, I mean, they're follow-up. You did a follow-up. I'll do some follow-ups. last week we had the article that was talking about how a lot of the crypto industry wants this FTX trial to go away because it's embarrassing. Well, the real reason why is because they're all tied to it. So Thursday, New York's Attorney General filed a lawsuit against 3 digital asset firms that were actually tied into this collapse. You had Gemini Trust, Genesis Global Capital, and Digital Currency Group, the parent company of Genesis. And the reason they're going after them because it affected 29,000 New Yorkers. We're among the 230,000 investors. But you probably got this. I know I got a phone call or LinkedIn about this when they were basically guaranteeing you returns on your money, 15, 16, 8%, like guaranteed returns. And so they were the Winklevosses, or the Winklevosses, right? Those are the twins that claim they started Facebook and it was stolen. Like they're always in lawsuits about stuff all the time. Well, this is their company. And they had a lending service. And this lending service basically owed more than $900 million to customers that are using their Earn program. So people were like, sure, take my money, give me my guaranteed return. And the way they were doing this is they were buying and trading crypto with Alameda Research. They were all tied in together. So this is not FTX was a criminal and that's all. Everybody's money, they were helping each other. And so there's another article that came out is apparently, so this was in the testimony, but FTX was using their customer funds to buy back their Binance stake. So Binance invested into FTX, and then FTX took customer funds to rebuy their stake out. Like they're all in bed, all of them.
Yeah. So you have these whales who are transacting back and forth, creating this artificial activity, right? Yeah, exactly. And it's not real U.S. dollars. It's done with these stable coins that can be simply manufactured. So it seems like there's a lot of value. It seems like values are going up, right? Because they push the values up with this, but it's not your average investors. And then people see this happening. Your typical average American investor sees this happening, and they decide I'm going to put $1,000 into crypto or something like that. And then the market crashes. Who gets hurt? It's your typical investor. It's not these Winklevosses who are making millions or billions of dollars. It's such a scam, and it's happening in plain sight. And finally, somebody is exposing this whole proof of reserves myth that we've been talking about for at least a year. Those fake audits.
Fake audits.
They're not audits, but they're attestation reports, and companies go out, crypto exchanges go out and get them from typically a regional firm, not the big four, and they'll claim this is an audit. They'll hold it out like it's an audit.
Yeah, they exploit the logo.
Yeah,
right?
yeah.
Put it on the website.
So finally, I saw an article this month on Accounting Today, an opinion piece by Matthew De La Fuente and Joe David, and the headline is "The Proof of Reserves Myth in Crypto Accountancy." And they basically talk about what we're talking about, how the proof of reserves doesn't actually protect investors because the only thing that it's verifying is the assets at a snapshot in time. And the auditors typically aren't digging into the assets. They're just looking at it sounds like they could be just looking at a screenshot. And there's no verification of the liabilities on or off chain or the governance of the organization, which is how you ended up with FTX having a proof of reserves report that they held out as an audit and then completely collapsing because there was no auditor looking at the code or making sure that Alameda didn't have a negative $10 billion balance.
So it's funny because even accountants are falling for this. I saw an editorial piece, it looks like out of the UK, talking about how FTX is the biggest audit failure ever. And I was like, wait a minute, they didn't really audit. I mean,
there was no audit.
Issued a statement, but there was never an audit. So how was it even an audit failure?
Yeah, to me, here's what my gut says. These proof of reserves reports are about as good as if I invited you, David, to screen share with me, and I showed you a screenshot of my balance at Bank of America, and then you issued a report saying, "Oh, Blake has X dollars." That's about how good these reports are. Basically useless. And we've allowed this to happen as a profession. Like nobody's standing up and saying this is not acceptable. I've got more audit stories here that we can talk about. Alan, you know Alan Anderson? Are you familiar with him, David? He's been around for a long time in audit as a consultant, and he has started writing some really great articles on CPA trend lines. He just wrote a piece called "Is Audit in Crisis Because of Definitions?" And he calls out this statistic that I like to talk about from the book The End of Accounting by Baruch Lev and Feng Gu. And he points out that the relevance of audited financials has dropped. So back in the 1950s, the market value of public companies directly attributable to earnings and book value reported in their financials was 90%. So 90% of the value of a company was attributable to earnings and book value in the financials. So back then, financial statements were very important. If
Which is
90%...
the whole point of GAAP, right? So you could look at the two financials and be like, this company is worth investing in or more valuable, right?
Yep. In 2010s, it was 50%. And so Alan Anderson wrote this article basically calling this out, that because of the decline in usefulness of GAAP, audited financials have become less useful. There is a perceived disconnect between the value of audited financials and stakeholder interests, with auditors often struggling to explain the purpose and the value of an audit. And the question is, would companies get audits if they weren't required to do it? And I think that actually a lot of companies would not. And I think a lot of investors wouldn't care because they aren't actually using the financial statements to make investments. When was the last time any of us looked at the audited financial statements of a company, like downloaded them from the SEC to make an investment decision?
Well, I mean, us being consumer investors, the retail investors, probably not. But I'm assuming people that, like big institutions that are making $400, $500 million investments into something, maybe.
I don't think they are either.
They don't
I think there's a whole emperor has no clothes kind of thing going on here, where because GAAP hasn't changed since the industrial era, that people aren't using them. And I could go on about this for like a whole hour, I feel like, so I won't. But the big issue is that GAAP doesn't describe intangible assets. It doesn't handle intangible assets well. In most of the businesses out there these days that are generating value, that are growing, are based on intangible assets. Look at OpenAI. What is that company based on? It's based on artificial intelligence. There's no tangible asset whatsoever in that company. It's worth billions and billions and billions of dollars. And I bet if you looked at its financial statements, it would show like no assets, like barely any assets, because we don't capitalize internally generated intangible assets very often in GAAP. So it's this weird situation where accounting, which does a great job of describing manufacturing and railroads and that sort of thing, doesn't handle these technology companies. And that's why Amazon looked like crap for all these years. Netflix, subscription companies, they don't look good on GAAP because GAAP doesn't know how to handle the intangible asset of a customer subscription. And I think people are finally starting to pay attention to this. Finally. And this all ties back to the talent crisis, okay? Because whenever I talk about the 150-hour rule, the most intelligent counter-argument is, well, it's not really the extra education that's the problem. It's low salaries. We just got to fix the low salaries. And I agree with this. I agree that the low salaries are the root problem. But what is causing the low salaries? We have to ask. It's the fact that GAAP is not that useful. So companies and investors aren't really willing to pay for financial statements the way that they should. Because it's
I'm a company, I'm going to keep picking whoever the cheapest auditor is every single time.
Yeah, because they don't really care. They just have to get it done because they're required to do it. So maybe a way we can test this is we could actually say, like, not every company has to get audited every year. Maybe say 10% of companies just randomly don't have to get audited and see what happens. Does anything change? Would it make a difference?
Yeah. Or the other way, the audit's more of a surprise. the other direction. Yeah.
Right, right. And you know, one of the things you hear from AICPA is like, audit is important, accounting is important because we are the defenders of the. They don't say it this way, but you know, we support the capital markets, right? Without us, they wouldn't function. Well, I wonder if that's actually, like, can we test that? I wonder if that's true. How do we test that? Because I think actually, if we didn't have audits, a lot of companies wouldn't get audited, and a lot of investors wouldn't care because of this problem we have with audits being this like bar you have to pass. It's like pass fail, which like guarantees like mediocrity and all this other stuff with the financial statements not being relevant.
To reinforce your financial statements not being relevant, there's an opinion piece. This is from a British website. It's called City AM. And apparently there's some legislation possibly coming down the pipe about reporting requirements. So even it would go down to maybe you only make your $50,000 a year business, you might have to still meet these reporting requirements. And where it's coming from on this is kind of how ridiculous they are. For example, in 1997, the Royal Dutch Shell Company's financials were only 68 pages. And now they're 399 pages.
Yeah. Who's reading 399 pages of financial statements? I don't think any of the analysts are doing it.
And worse than that, the one part you might want is on one page way deep in there, right?
Yeah.
So he's talking about a report that had 6 pages on people and culture, 12 pages on task force and climate-related disclosures. And then on page 256, there's a one-page summary of the 10-year financial records. like they could just leave that page out and nobody even notice.
Yeah.
The financial part.
Mm-hmm. David, part of our headline in this episode is that QuickBooks is launching bill pay. And the consequence of that is that Melio and Bill are out. They're getting kicked out of QuickBooks.
Yes.
What is happening?
So we kind of the writing was on the wall when we were at QuickBooks Connect last year. They kind of filmed the new bill pay they were building for QuickBooks Online. And so this has been on March they've been on for years because, I mean, I think Bill was built into QuickBooks 2015, 16 time. So it's been there, you know, a good 6 to 8 years. And then you have Melio, which has been built in the last almost full 3 years now. That's been built in. But it's also been kind of two disconnected things, right? So Melio is kind of in the normal QuickBooks Online, kind of for the smaller businesses. You got Bill, who is still in QuickBooks Advanced, right, for the enterprise customers. And then slowly they've been rolling out their own thing in the middle here. And it's had ripple effects. Bill.com is pretty much, this is a quote from Rene Lacerte. And this is in their last earnings call. He says, Intuit has decided to compete on payments rather than partner. Right? And as a result, they are going to, they're expecting churn, and they're looking at Intuit as a competitor now. Mm-hmm. Right? And so Bill just launched a whole set of rebranded products. So they're calling it Bill Financial Operations Platform. And that's going to have Bill Accounts Payable, Bill Accounts Receivable, Bill Spend and Expense. And now they announced it, but now they've actually rolled it out this week, the Bill Accountant Council. So they're building a whole there's no GL, but they're building a financial stack for you to put your clients on outside of QuickBooks. You can see the writing on the wall on that. It's coming. And they did announce, so now they finally released a pricing page. So let me share my screen.
Payments and banking. QuickBooks bill pay plans.
Get to the top here. So it is one place to streamline bill pay. So this is new website. It's spun up. And they have plans at the bottom here.
This is on the QuickBooks website.
And the basic is free. You can do 5 ACH payments a month for 100% free. And it also includes automated bill creation, and then it'll automatically match the transactions, obviously, in the bank feed after it's done.
Okay.
The automated bill creation is interesting because, I mean, I've uploaded bills, and they haven't been great. So I wonder if that's only going to be the ones that are part of their network. If it's somebody sends an invoice from their QuickBooks to me, and it becomes a bill into my QuickBooks, possibly. The second plan is Premium, which is $7.50 a month. And then the top plan is Elite. And those two paid plans, they come with 1099 filing, So instead of you having to buy the 1099 service separately, you'd pay your bills, your vendors through this service, and then you get your 1099 filing for free. And then the big one at the highest level at $45 a month, they're going to add in roles and permissions and bill approval workflows. So it feels like they're building a stack of what people need. I do think that for the average QuickBooks user, $45 a month is pretty expensive for paying bills, because so many people just subscribe to stuff on credit cards now, right?
Yeah. Yeah. 45 a month. Oh, I mean, it is interesting. I wonder why. I mean, I know why Intuit did this, because the strategy for making money on QuickBooks has always been you get people in on the basic subscription and then you upsell them on payroll and what was the other payments? Payroll and payments was always it. And that's how they get to $200, $300 a month
And payroll.
in the end.
Yeah.
Yeah, yeah. So I can see why they're doing this. And then they're going to get a piece of every single ACH transaction that happens, because they're charging for that too, right?
Yeah. And on the other side, it's funny if we think about what one of the things Oracle announced or NetSuite announced is they're unbundling bill scanning and paying bills. Because last year they launched bill pay, so scan bills and pay the bills. They're separating that out because, so I guess, so people can have freedom how they want to pay the bills, but they still want the advantages of bill scanning or vice versa. Okay. Everybody's attacking it differently.
We have a comment here that pro advisors are going to have discounted pricing that they can pass on to clients. Any word on that?
I did not see anything noted or that caught my eye.
Okay.
They are offering 50% off the first 3 months if you sign up for the 2 paid plans.
But the ones that we were looking at, that's for direct customers, not the pro advisors.
Yeah, not the pro advisor pricing,
Okay.
correct.
So we'll have to get back on the discounted pricing, find out what that is going to be. We got more listener mail. I guess I'm just going to go ahead and read through some of this. This is from Keith. Keith said, I love your articles about the required 150 credit hours. I called the result of this however many years ago when this requirement was instituted. Requiring essentially a master's degree was an outrageous requirement from day one. Accountants initiating this were obviously not economists nor in touch with the real world at the time. To require an extra 30 hours in Impressionism, art studies, gender studies, or whatever the in topic of the day is, does nothing at all for the profession, as you have noted. The Institute's powers that be that came up with this requirement were just institutional elites. There's nothing about our profession that requires more than a bachelor's degree. We are not brain surgeons or rocket scientists. We are accountants that pass a test on our ability to retain certain knowledge. The fact that the debits equal the credits does not change whether we have 120 hours or 150 hours. It is the experiences we have in performing our work. When we hire new accountants, which are harder and harder to find, I always tell them that whatever they learned in school, they will need about 10% of that knowledge to make it in the accounting profession. It is the work experience that will make or break them, not those extra 30 credit hours which you paid or borrowed thousands of dollars for. I won't see the reversion to the 120 hours and 2 years experience in my lifetime, but keep up the good fight, as the 150 credit hour requirement has destroyed our profession. Thanks, Keith. That is from Keith Thompson. Thank you, Keith, for your take. And if you want to send us a message, you can email us at theaccountingpodcast@earmark.me. Find that in the show notes.
I have another suggestion for Keith. He can respond to an opinion piece that was in Accounting Today that called out you, Mr. Blake Oliver, in your post about the 150-hour rule.
Oh, yeah?
So there's an article written. This was written, his name is Rick David. He currently manages his own company. It's Danlick Solutions. They're a C-suite consulting practice. Helps professional service firms, accounting firms, etc. But prior to that, he was he graduated 1978 from the University of Michigan. From what I can tell, he got an accounting degree, but I can't tell that he's ever been a CPA, if that makes any looking at his history. But he did serve. He was in the mid-2000s there. He was a member of the AICPA's Professional Ethics Executive Committee. He was on NASBA's board member for Michigan State Board. He was a committee member for NASB, NASBE. So everything says he was a CPA. but it's nowhere on his title and LinkedIn. It's not, he has no comment, no letters behind his name, etc. But anyways, he calls you out, Blake, because he specifically thinks that your argument of removing the education requirement is going to lower the bar. And
I
make the
hate that
quality-
phrase, lower the bar.
Lower the bar.
Ugh.
And his slippery slope argument here is, well, if we use that logic, Blake, we already have, because you're using data, Blake. If we're using data, the data says if somebody takes the CPA exam and fails, they won't take it a second time. So using your logic, we should make the test easier. So he took the reduction of the 150-hour rule and said that based on the logic and arguments of that argument, we should make the CPA exam easier. But he obviously doesn't want it easier. He's trying to illustrate a point. But I think he's missing the entire point because the CPA exam is the bar. That's
Right.
the bar.
It's the test of knowledge.
The 30 hours is a barrier to proving your knowledge on the bar. So, and then, like I said, I looked at his record. I think when I see these articles and I look with people, and I'm assuming he's a CPA. He was at KPMG for 30 years, right? Like straight out of college. I'm assuming he was a CPA, but just not very clear. But if the extra 30 hours were so important, there's no record of him getting an MBA or a master's or like, if it's so important, how come all these old people aren't going back and getting the 30 hours anywhere in their career?
I think everybody who argues in favor of the extra 30 hours should go get it themselves, right? You shouldn't.
States should
it's
start
so
proposing that.
hypocritical.
If states propose that, anybody who doesn't have to has to go get it. Yeah. So feel free to reply to that piece on Accounting Today or on his LinkedIn post.
I think you put it really well. I'm going to start using that, David. The 30 hours is a barrier to sit for the CPA exam, which is the bar. And that's why you see states getting rid of this barrier to sit for the exam now. Now you can, in some states, sit for the exam with only 120. So why, if we're going to let people sit for the exam at 120, why do we make them then go get 30 more after they've proven their knowledge on the CPA exam? It makes no sense. It makes even less sense when you do that. So I just think we have to get past this idea that sitting in a classroom makes you a better CPA. Now,
Taking
it might.
classes that have nothing to do with accounting.
Right. It might if you take the right classes, but most people aren't, right? They're just doing anything to get it. And so it's not making us better. And all the evidence says it's not making us better CPAs. And it's just adding cost and time. So it's not lowering the bar. In fact, I would say it's increasing the bar to go back to 2 years of work experience. Because right now, we're letting people get licensed as CPAs with a single year of work experience. When we all agree that a year of work experience is more valuable than a year of additional education. So by swapping that year of education for a year of work experience, we are increasing the bar. I mean, hey, I'd be in favor of making it 3 years of work experience and allowing anyone with a bachelor's degree to sit for the exam. And maybe you even have 3 pathways if that's necessary. But don't require people to go sit in a classroom and take these specific classes. If they can get the knowledge elsewhere, why do we care that they paid money to a college or a university? If they can get it in the real world, that's just as good, if not better, in many cases.
Well, the vast majority of the industry does not have the extra 30 hours, and the industry is not collapsing of incompetence.
Exactly.
So obviously, it's not that important.
Yeah. And the real reason it was put in place that people say, I don't know, I wasn't around when they put this place, was like to, increase the barrier to like reduce the supply of CPAs. But
actually, that's a good way to phrase it, right? It was purposely put in as a hoop to jump over and a barrier. It was a wall that was built on purpose.
And it made sense when we had too many people going into accounting, right? But nobody was looking forward into the future, looking at demographic trends. And
what did Ronald Reagan say to Russia? Like, tear down this wall.
Yeah, exactly. We need to tear down this wall. Yeah.
We'll have our editor stick that quote in. Go find it and stick it in right here.
Here's another one from Sean. Sean said, "Good morning, Blake. Picking up this thread again after hearing you and David talk on it during the podcast. I'm a few weeks behind. David made an interesting point about specializations. Why not have a CPA A for audit, a CPA T for tax, and other specialized certifications? That could even potentially justify the 150-hour rule, at least for those niches. To your point about integrity, objectivity, and professionalism, it's a fair one. To sell haircuts professionally, someone needs to get licensed and have a certain minimum training. But to work as a bookkeeper or even more advanced roles, the law requires none of that. I'll notice a bad haircut pretty quickly and not return. Low risk, low consequences. Bad bookkeeping can go undetected for years with very expensive consequences. High risk, high consequences. I'm not sure that the answer is that everyone in accounting should be a CPA, but why isn't there at least some minimum education certification? Why isn't there at least some minimum certification, testing, and ethics training at all levels of the profession? So at least we can get parity with barber colleges, for Pete's sake. These folks wouldn't necessarily be full CPAs. They get some other sort of letters after their names. But for those operating with professionalism, it would provide validation. For consumers, it would provide some sort of objective way of confirming someone's skill and integrity, etc. Your thoughts? Thanks, and keep up the good work, Sean. So I agree that we would be better off spending our time getting states to protect the accounting role for CPAs more. Right now, the only thing you need it to do is audit, right? But we do way more than that as a profession. So like it doesn't make sense the way we put in this education requirement for what? For what purpose? So I'm not sure how I feel about like splitting it up into multiple. I think it could get really complicated very quickly.
I always thought the easiest with just a plus. If you've done the extra 30, you get a plus.
I think it would make sense to have a CPA and then something that's more like a paralegal for the accounting profession. And, actually license bookkeepers who do that kind of work and have some minimum bar. I mean,
wouldn't that be profitable for the AICPA? You could have this like junior, lower tier membership and get another 1 million members paying money.
I know, right? It would be
like
great.
You'd want that, right?
Right now, the CPA societies, the boards, the AICPA, they're hemorrhaging members. So you think they would be trying to come up with ways to get more people in the door to raise the stature of the profession and protect the public. But like nothing we're doing is protecting the public. That's the problem with the extra 30 hours. It doesn't protect the public. There's no evidence it protects the public. It doesn't make it anyway. Okay.
So two professors, or three, I guess, from the University of Florida, University of Oregon, figured out how to solve the pipeline problem.
How?
Like this is actually the more I like read this and think about it and read it and think about it, it's really making my mind explode a little bit. Because you've talked about this 2 years ago, 3 years ago on the podcast, how like the lack of accountants is going to cause audits, failures, and fraud. So much fraud, so much fraud, so much fraud.
Yeah.
And you would think like, oh, this is bad publicity for all of us if all these frauds keep happening. And they're happening, right? FTX, et cetera. But what they've done is they found data that, obviously frauds cause negative problems to the entire market, financial crimes, right? But they found data that's actually great for all of us. And to summarize the data here, if you're in high school, Blake, and there's lots of frauds being covered, financial frauds on your local media, like every day there's stuff about the FTX fraud, right, on the media. During your formative years of high school, you are more likely to become an accountant.
Really?
They found this in the data, yes. And not only that, they were looking at historical educational and labor market data of more than 500,000 accounting graduates. You're actually, if you're exposed to this fraud exposure in high school, you're more likely to work an accounting job, go into public accounting, work for the big four, basically, and become a certified CPA. So in a weird way, the market, it's all supply and demand, right? All these frauds that we're currently in might encourage a lot more accountants. It's
silver linings.
but this also goes to like stepping back, where sometimes like people are so set on their beliefs.
Yeah.
Like nobody would have, who would have had this hunch that maybe a bunch of fraud is going to get us more accountants?
Well, if we don't get more accountants, we're going to have to use AI to augment accountants to replace a bunch of staff work. So let's talk about the latest AI stuff. We're going to come full circle here. So latest developments for ChatGPT. This is not new news, but we haven't talked about it yet on the show, so I feel like I should mention that ChatGPT can now surf the internet again. It used to be able to do that. Then they turned it off because they found it was bypassing paywalls on news sites. Then they fixed it.
This would be
I
so
know.
efficient for this show. My production would be so much faster if that was a feature.
So they've given it access again. So if you have ChatGPT Plus, you can now turn on the Bing search, which is very helpful for doing research. I love that. ChatGPT can also now see, hear, and speak. Now, this is rolling out to people slowly, and I haven't mentioned it because it wasn't available in my app yet, but now it is. So now I have the ability to create a chat. And
You're
it
not
actually,
sharing yet if you're going to share.
Oh, I'm not going to share
Oh, you're on your phone?
because I'm on my phone.
Oh, okay.
But like, I actually have the ability to, there's a little like headphone icon, and I have the ability to like press that headphone icon and we can talk to it. So like, David, do you want to talk to ChatGPT like it's a person?
Hi,
can tell-
ChatGPT. What is
Well-
gap?
All right, I'm going to do this. Hi, ChatGPT. What is gap? Oh, I didn't have my volume on. Hold on, let me try again. Hi, ChatGPT. What is gap?
Hello. GAP stands for Generally Accepted Accounting Principles. It's a set of standardized guidelines and procedures used in the field of accounting to prepare and present financial statements. These principles ensure consistency and transparency in financial reporting, making it easier for businesses and investors to understand and compare financial information. Is there anything specific you'd like to know about GAP?
Can you tell me when accountant salaries will increase? I'm doing a live podcast right now, and one of our listeners on YouTube, named Frank, is really curious when accounting salaries will increase.
Accountant salaries can vary depending on factors such as location, experience, and the specific industry. However, I can provide some general insights that might be helpful for your live podcast. 1. Economic conditions. Accounting salaries often correlate with the overall economic conditions. In periods of economic growth and increased business activity, there may be a greater demand for accountants, which can lead to higher salaries. 2. Demand for specializations. Salaries can also vary based on the demand for specific accounting specializations. For example, accountants with expertise in areas like tax planning or forensic accounting may see higher salary growth if there's a strong demand for those skills.
Oh, that's what you're just
3.
talking about, David.
Experience and qualifications. Accountants with more experience, advanced degrees, or professional certifications like the CPA, Certified Public Accountant, tend to earn higher salaries. Continuous learning and skill development
All right.
can contribute.
So,
Not gonna make a
in
prediction,
comparison, you got your Alexa on the shelf behind you.
Yeah.
Ask your Alexa what's gap. I just want to see what happens.
Oh, I think it's muted right now, but
Oh,
it's
it's
not
not
going to be
listening.
good. I mean, it might give a definition.
Yeah.
It might give a definition about as good as Alan Weisselberg.
So did this just replace you using Siri now?
Well, I
on
have
your
to
Apple
actually,
phone?
you have to actually open up the app and do it. But so I haven't really been using it much. But it's kind of a fun way just to like do research or ask questions. But imagine what Siri is going to be able to do.
Yeah, that's
Right.
That's what's going through my head. Oh my gosh, when this gets added to that. Can I read a quote about AI and let you interpret it for me?
Yeah, go for it.
So there's an announcement. OpenAI is now in a partnership with PwC
Oh yeah,
on something.
I'm glad you brought this up.
And here's the quote. PwC's, or this is not. There's a quote in here, so it's like a quote within kind of the quote. So I'm just going to read it like this. PwC's new AI system is already, quote, behaving like a 25-year, 10-year partner, end quote, Vivek Sharma, Chief Operating Officer for Tax, Legal, and People at PwC UK, said in an interview Monday.
Wait, behaving like a what?
A 25-year, 10-year partner. What does that mean?
A 25-year tenured partner? I mean, I've heard of people saying that AI is acting like a staff accountant or an intern, but
is AI making
partner?
people work 80 hours? Like, what is AI doing now? It really
Are the
makes me
partners
wonder.
at PwC that useless? That it's that easy to automate them? I mean, are they just signing off on audit opinions without even looking at stuff? I mean, if so, I guess, yeah, you could use AI to automate their jobs. Are they just yelling at people to bill more hours? That's easy for AI to do.
And is he looking to pick a fight with the existing partners? Because like, aren't people going to be like, F you?
Yeah, right? That's
Jeez.
amazing. Okay. Well, that's funny. That's funny. Frank says, did AI get a new yacht? Yeah. I don't know if PwC partners make enough to get yachts, honestly. Like I don't, but or they work too hard. They just sit in the dry dock all the time. They never get to actually go out on them because it's hard to get good internet on a yacht. So what are they actually doing with AI? They made a deal with OpenAI. Do we have any details on what they are actually going to use it for?
It's going to, you can use it to consult on complex matters in tax, legal, and human resources, due diligence, identify compliance issues, recommending whether to authorize business deals. So it feels like it's going to be kind of the back-end wiki knowledge-basey thing.
Yeah. Well,
similar to what they just talked about last week for Grant Thornton. Like, again, any listeners, if you're getting access to these things in your firms, we'd love to hear how it's working.
Yeah.
Like, they're rolling it out to all of you right now. I want to hear somebody talk about them using it.
Melanie says, I've been using AI for brainstorming. The problem is that once you get started, it's hard to get it to shut up. I love it for brainstorming. If you have an idea and you just want to like bounce it off somebody, it's a great tool for that. What am I missing? What did I not think about, right? When I made this plan or this email, how could I improve this?
Because then you're not using up my time. You don't have to contact me. It's actually, it increases productivity for two people.
That's right. So it's not very clear from the article exactly what PwC is using this for, but my guess is they're taking all this internal knowledge, like all these papers they've written, all this research they've done, they're dumping it into the large language model, and now people can query it, which is way better than doing a keyword search and having to dig through a PDF. Very much faster. It's like what we saw the Department of Defense doing with all of their documentation. And
I think this is not to solve for their own internal companies. I think this is to build half-assed ones that are good enough-ish, and they're going to sell it in their consulting divisions to companies everywhere, and it's never going to be great, but they're going to sell the piss out of this. That's what this article is. Because if I'm a CEO of some other company now, I'd be like, wow, I could buy this from PwC and implement something like this here. They'll help me implement this, and it'll be like 25-year experienced employees. Like,
if you think about it this way, like let's talk about corporate tax. So you are a CFO at a company, and you've got like a corporate tax question. Normally, you email a partner at PwC. They read the email, they reply to you, and they charge you $500 for it, right? And now you can ask that question of PwC's chatbot, which is powered by OpenAI, and that bot is going to go through all the previous responses of those tax partners to you and is going to give an answer.
But that's too efficient. You can't bill for that in the same way.
That's the thing I wonder
is
is
sell you our system. We're gonna consult you on how to roll this out of your own version in your own company. That's why they're all doing it. This article talks about KPMG, and then Ernst & Young partnered with IBM. Deloitte's using Google Cloud. Now PwC's using OpenAI. They're all doing, this. They're all building a $1 billion consulting division each, just rolling out GPT type stuff in companies. That's where the money is.
And I think they will, as Frank said in the chat, I think they will replace a lot of consultants. Or the consultants will more like the consultants will be able to do more. But
I think the consultants are going to consult on how to roll this crap out.
I know you think, right, but they're also going to use it internally. Like think about all the copy paste that consultants do constantly.
Yeah.
AI can do that. And it's not just for big businesses. We're seeing AI search roll out in Xero. Xero announced that they are now using Gen AI on their support and learning site to power their searches for queries to provide immediate answers, more accurate content articles for people. I think that every app is going to do this for search. And maybe finally we'll have good global search across QuickBooks and across Xero and across all of these apps where I'm constantly amazed at how bad search is trying to find something. And I just want to be able to type like vendor name, amount, and description and get a list of those transactions that's like relevant. And you still can't do that in a lot of these systems, but
And
AI
to clarify,
can help.
this is search on their help site.
Yes, on their help site, not yet in their GL, but
And
they
is there-
should do it in the GL too.
But is their help site, if I'm looking at it, it looks and smells that it might be actually what you get from Salesforce. It's the Salesforce. So maybe did Salesforce roll out some sort of AI search? Interesting.
I'm not sure.
How do you know if you're using it or not? Because I don't see a little like indication that there's a little robot helping.
David, I didn't dig into this. I'm just reading a
okay.
press
Sorry.
release. I'm not an investigative journalist.
I clicked on it. So I was just clicking on it. Okay. Oh no, it does. Actually,
It does?
Share your screen.
Share my
your
screen?
Yeah. And
What? Why don't you share your screen?
okay, I'll
You're the one.
share my screen. So I got to move it around. Okay, let's move this here.
We have a comment from a live stream viewer, Saints, says, I feel as though financial fraud will now become more difficult to catch. I think once the fraudsters figure out how to use AI to generate fake invoices and fake emails, I mean, they're already doing it, the voice cloning technology, it is going to get harder. But then that's going to inspire a whole generation of accountants, like you were saying, David, to go out and catch the fraudsters, make it more interesting, perhaps. And I don't know, if AI can generate fake data, it can probably analyze fake data and figure out how to find it. We're seeing your Feedly right now.
I'm an amateur hour here. Let me share the right screen this time.
I'm filling the time while David figures out how to share his screen. It's like you're on a CPA Academy webinar right now, folks. Should we do 10 minutes of introductions?
Got it. Okay. So
Hi,
we're
I'm
seeing
Blake
this.
Oliver. I'm a CPA, and I've been practicing now. Okay, there we go. We got your screen going.
All the people attending the live feed, you can see this. Okay. So
Yeah.
I'm on the help, the support page for Xero. And
Central.0.com.
and there's a typical search box in here.
Yeah.
And I'm just going to type in reconcile or reconciliation. So I'm going to click that. I'm going to hit search. Takes a second. It's chugging along. It's bringing me up to the articles.
Results page. Yeah.
The results page, and it didn't work this time. So now I just
There we
searched
go.
for the word
Oh, here we go.
HubDoc,
Here we go.
and it's starting to. It basically creates a generated answer just for me. Now it was different last time I searched.
Why
Give me
don't you
something to
say
search
like,
for.
how do I get paid or something? Like try.
How do I get paid? Enter.
It's not working.
It-
I saw it wanted to generate something before.
It did generate a bunch of stuff. Give me another easy thing to search for.
Listeners, help us out.
Create invoice.
There we go. Nope, not working. Oh,
There
here
it
we
is.
go.
There he is.
All right, generated answer for you. And okay, you said what was the search you did?
I said create invoice.
Okay, and now at the top of the search results, we see generated answer for you, beta. To create an invoice, follow these step-by-step instructions, and it gives you 7 steps. So it went into the help article and pulled out the part that you need in order to generate that invoice.
And then instead of me clicking on the 4 or 5 different 10 search results it gave me, in
It just
theory, it
pulled it up.
summarized it for me with a learn more, and I can actually, create a progress invoice.
And then it sends you to the article.
There we go.
Okay, see, that's kind of cool. So basically pulling out just the piece of that help article that you need. And this is the same way that I think these AI chatbots are working at PwC or at DoD or anywhere else, is they're going into the documentation, finding just what you need and pulling it out for you. And maybe even pulling from multiple places.
And
And that's something AI can do really well, is like summarizing information.
And this is the quickest, safest way for people to start spinning this up for end users, because you're not having it pointing at any data. It's not pointing at
Yeah.
accounting data. It's hey, just implement it on your help files. That's going to save everybody time just doing that.
Yep. All right, David, I think that's it for us this week.
Did we catch all the headlines?
We got all the headlines that we teased, so I think we're done. I'm a little out of it. Apologies to our listeners if this sounded kind of random, bouncing around everywhere. I'm still recovering. David, if people want to get in touch with you online, where can they do that?
I'm on all the socials, just at David Leary.
If you want to argue with me about the 150-hour rule, you can find me. I'm at Blake T. Oliver on X. I'm on LinkedIn. Follow me on LinkedIn. You can subscribe to my personal newsletter at blakeoliver.com, and you can send me and David an email by emailing theaccountingpodcast@earmark.me. That's theaccountingpodcast@earmark.me. And don't forget, if you made it to the end of this episode, you can earn CPE credit for it. Download the Earmark app for iOS or Android. Take a quick quiz and get your CPE certificate. The CPE course for this episode will be available the week after it airs. That's all I got. See you here next week, David. Bye, everyone. Thanks for joining us.